Time now for the business news with Kate Moody. Good evening, Kate.
Hi, Delana.
Kate, mounting tensions between Russia and Ukraine having an impact on the aviation industry.
Yeah, the Dutch airline KLM has stopped flying to and from Ukraine. It's not flying through its airspace either. Germany's Lufthansa is considering doing the same. Ukraine International Airlines has said that its insurance companies have rescinded coverage for at least some of its aircraft and routes. The carrier has also sent some of the planes which are on lease out of the country. The Ukrainian government is trying to keep its airspace open for commercial use. On Sunday, it said it was allocating just under $600 million to cover some of the financial risk for airlines, insurance, and leasing companies that continue to operate there. Those geopolitical tensions are weighing on travel stocks as well, and we saw an unsteady session on Wall Street, stocks falling in the last hour or so of trading. The Nasdaq flat, the Dow Jones and S&P 500 each down about 0.5 percentage point and 0.4% respectively there. Oil prices hit a 7-year high because a conflict between Russia and Ukraine could really disrupt global supplies. Earlier, we saw the major European indices dropping under pressure, losses of around 2% in Paris and Frankfurt, a bit less in London. A new report says that Europe's biggest banks are still investing in new oil and gas projects, despite committing to reducing their climate footprint. Inga Oyatade has more.
25 of Europe's biggest banks stand accused of making empty promises after data showed they provided billions of dollars in funding to organizations that are expanding oil and gas production. Activist group Share Action reported that banks contributed $55 billion to polluting energy companies last year, half the levels of 2020, but not enough to meet the bank's net zero emissions targets. Among the worst offenders, HSBC, Barclays and BNP Paribas, which over the last 5 years have put over 150 billion euros into fossil fuel projects. In May, the International Energy Agency declared that investments in new oil and gas fields must stop if the world were to have any chance of capping global warming at 1.5 degrees Celsius above pre-industrial levels. Climate activists argue banks are ignoring the science.
For the world to avoid 1.5 degrees of heating, then no investment is needed anywhere in any new coal, oil or gas production. Now is the time for banks to get real with the science and announce a science-based moratorium on funding new fossil fuel projects.
The accused banks have responded saying they will do more, but Share Action is calling on investors to effect change. It says shareholders should place more pressure on banks to implement policies that meet climate goals.
Asia's biggest air show opens its doors in Singapore on Tuesday. The event will host fewer companies and visitors this year because of the coronavirus pandemic. But big players like Airbus, Boeing, Rolls-Royce and Safran will all be on the ground as they seek to drum up new business. While the US and Europe have seen a rebound in air travel in recent months, many Asian countries still have restrictions and mandatory quarantines in place, and the sector hasn't recovered as strongly there.
As we speak, the market is down by more than 90% for international travel. So we have a long way to go. This is kind of I would say, symbolizes the kind of start of a recovery process that, at least for international travel, is going to be very, very long. There could be some more setbacks on this road, but at least, we're more optimistic.
Can love conquer supply chains? That's the question for many florists this Valentine's Day as they deal with ongoing disruptions to their stocks and prices. Charles Pellegrin reports.
Roses are red, violets are blue, planes are grounded, ships are too. This year, wholesalers are having a hard time getting all the flowers they need for Valentine's Day.
There are issues with getting trucks in and out, in logistics, and I think that's been a long chain of events with the pandemic, with bottlenecks, with growth production, and also airline routes have been rerouted, and so it's becoming more challenging to get flowers into the area.
But consumers are still willing to dig deeper in their pockets. This florist has seen prices double since last spring.
Even the prices have gone up. I'm still able to, do the arrangements, and they don't mind about the price, which is kind of surprising.
But some people are choosing different gifts. Retail spending is expected to reach close to $24 billion this Monday, with candy being the gift of choice for most respondents at 56%, while flowers are third at 37%, just behind greeting cards and ahead of spending an evening out, all of which will have been affected by the 7.5% bump in inflation over the past year.
I think we all realize that that inflation is around us everywhere, no matter where we go, and it's in flowers as well. But I don't think you can put a price tag on the cost of love.
And here's to hoping consumers will agree.
All right, always quite high stakes there. The average American consumer, Delano, this year said they were planning to spend up to $175 on gifts. That's up from $164 last year, and it's not necessarily that they're more generous. It's that inflation.
That inflation, which you
actually.
keep talking about. Thank you very much for that, Kate. Kate Moody there with today's business news.